What's up, you guys? I'm Dan. This is Frugal Not Cheap, and with my Tesla shares having recently hit a gain of over 1,000%, I thought now would be a good time to talk about holding individual stocks within your portfolio. So, how did I come to have such a large gain on my Tesla shares? How did I end up invested in Tesla in the first place? Well, I've been following the company for a long time, and I really believe in their mission of moving the world towards sustainable energy, moving away from fossil fuels, which you might think is a little bit ironic given that I'm a commodities trader, and I totally appreciate that point. But I do believe in these things long run, and I do try to do things that help the environment in other areas of my life. And following Tesla is one of the things that makes me excited about the direction that the world could be moving in. So I found myself around my birthday last year, which happens in August, having a little bit of extra cash and wanting to put my money where my mouth is. Wanting to put a small investment into Tesla so I could become a shareholder in a venture that I believed in. Last August, I bought 6 shares of Tesla. At the time, those shares cost $219.83 for a total cost of $1,323.93. Then, a year later, on August 31st of this year, 2020, there was a stock split, and it was a 1-to-5 stock split. So that means that each of those 6 shares was split into 5 shares, meaning I ended up with 6 times 5, or 30 shares total, but still at the same valuation, all else equal. Of course, the price had moved, but that's essentially what happened. And then not too long ago, on November 24th of this year, I took a look at my portfolio to see where those Tesla shares were trading at, and those shares had appreciated pretty significantly. Each of those 30 shares was valued at $555.28, which means that the total position in Tesla was now valued at $16,661.40. Starting from around $1,300, we did pretty well, I think, with a gain of $15,337. That, in percentage terms, is 1,158%. So pretty darn phenomenal. This is definitely a black swan event, something that I don't expect to see any other time in my life. I once heard a story where someone had given a tip. This was early on in the Bitcoin days, to someone else to take a position in Bitcoin. And then sometime later, after there'd been a very rapid appreciation in Bitcoin, they were told to sell out and to never, ever again expect to get those kinds of returns. So that's what I'm thinking here with Tesla here. I'm very, very happy that this company did well. These returns are phenomenal and something that I don't expect to see again in my lifetime. It'd be great if it did, but we'll see. But mostly I'm happy that a company that I believe in is doing well. So they're moving on with their mission to accelerate the transition to renewable energy. Tesla is not only a car maker, they're also becoming bigger and bigger in other areas, including home energy storage with their Powerwall battery packs. They're also getting big on solar, and they're really starting to make some ground on launching their solar roof product, which is a solar glass roof tile that is supposed to last quite a long time, but it also generates electricity and looks much more pleasing than having solar panels up on the top of an existing roof. And so that, combined with the battery pack system, means that you can store electricity during the day generated from the sun and then use that energy that's stored in the battery pack at night. They've also launched a lot of utility scale large battery packs as well, which are replacing fossil fuel-based peaker plants, which take a lot longer to start up because electricity can move instantaneously like that. And they're also moving into commercial trucking with their Tesla Semi. And of course, they're helping to improve the fuel efficiency of the overall vehicle fleet as their vehicle sales each year continue to climb at a very rapid rate. Things were a little bit tense with the launch of the Model 3, which is their entry to mid-level luxury vehicle. So much cheaper than the Model S and Model X, but still not your, economy car, nothing affordable like that. Hopefully that's coming in the future. They're launching their Model Y, which is a sort of a crossover SUV, a slightly larger version of the Model 3, but with a hatchback, which should be a really big hit in Europe. And I think just because of the ride height should be quite a big hit here in the United States as well. So overall, I'm really excited about the product roadmap that Tesla has. I didn't even mention the Cybertruck and the Tesla Roadster. Those are pretty cool. The latter especially as a halo vehicle. But anyway, I'm very optimistic about the future for the company, and really optimistic optimistic about a lot of the ventures that the CEO Elon Musk is involved in. Had SpaceX been traded publicly, I probably would have bought some shares there as well, also because I believe in the mission. And similarly for the Boring Company, the Neuralink, and also, well, OpenAI kind of went the wrong way, but the initial idea behind OpenAI I think was cool. I don't know what happened, they've kind of gone astray. Anyway, all this to say, very happy about how things are going for Tesla, and that I am a very small shareholder of Tesla. But I don't advocate at all holding individual companies in your portfolio as the basis of your portfolio as a whole. If it's a very small share that you're kind of using as fund money, then that's one thing. But the idea that you can pick individual stocks and beat the market consistently long term is just not something that's borne out by the data. If you look at mutual fund managers, for instance, they are professionals whose job it is to allocate funds within that mutual fund to companies. And you'll find that while they may have a hot streak, there's always reversion to the mean. In the long run, they just are not able to beat the market. And there's tons of stories talking about that. There's even a really funny anecdote about how monkeys picking stocks by throwing darts at a dartboard could do better than a mutual fund manager. But in any case, it's just that it's very, very hard, even with the specialized information and resources you might have, to beat the market. You just can't seem to do it long run. In fact, very famously, Warren Buffett made a bet against hedge fund managers that the S&P 500 index, the Standard & Poor's index of the 500 largest US companies by market capitalization, would beat hedge funds. And so there was a bet made for, I think, $1 million against another hedge fund manager who would select a number of hedge funds that would kind of be the competitor to the S&P 500. And the S&P 500 ended up handily beating these hedge funds over the time frame that they had set. So it's interesting because Warren Buffett himself is an investor in individual companies who's been incredibly successful. And yet he says that the S&P 500 is the way to go and used it as the basis for this bet against hedge funds who are trying to pick companies individually. Not only that, but he has said that after he dies, that his remaining holdings, his wish is for those to go into broad-based index funds. Of course, a lot of it going to charity as well, but a lot into broad-based index funds so that his family won't have to worry about picking stocks and what have you. And so that brings me to another sort of ironic point, which is that I actually own two individual companies within my portfolio. The second one that I own is Warren Buffett's Berkshire Hathaway. But I don't own Berkshire Hathaway stock because of Warren's track record in picking companies or what I believe about how well his company's stock price is going to do in the future at all. The only reason I own Berkshire Hathaway stock is because there was a guaranteed gain to be had. You see, I have GEICO as my auto insurance provider, and GEICO is owned by Berkshire Hathaway. So on November 16th of 2019, I bought one single Class B share of Berkshire Hathaway, and that was valued at the time at $220.78. But that purchase enabled me to receive a discount on my auto insurance policy of $21.75 for 6 months worth. So for the entire year, the actual savings are double that at $43.50 a year. So take that, divide by my purchase price or the cost of getting those shares, and we have an immediate return of 19.7%, which is pretty fantastic. Then add to that the fact that the stock actually did end up performing okay. So I checked on the same day that I saw that giant gain in my Tesla shares, I saw that Berkshire Hathaway stock was trading at $233.92 for a 5.95% gain. So if we add that to the 19.7% that we got on the auto policy discount, effectively we're looking at a gain of just under 27%, which I think is pretty stellar. So again, those are the only two individual company stocks that I own within my portfolio. The bulk of what I have is all in low-cost index funds that reflect the total global stock market. That's my personal philosophy, and it means that my risk given any individual stock is very, very low because it's a highly diversified portfolio. Not trying to pick the winners and losers. It's going to allow the winners to rise and the losers to fall out of the index. We'll talk about that more in the future. I also plan to talk a little bit maybe about hedge funds. But for now, very excited that the Tesla stock has performed so well and the company is doing well. Have you had any black swan type gains like this? I'd be curious to hear if you have. If you enjoyed this video, hit the like button and I'll see you in the next video.